Over the weekend in D.C., the U.S. and China continued to butt heads over the valuation of the yuan. With more on what the IMF did and didn't accomplish, we bring in Daniel Tenengauzer. He is head of emerging market currency and rate strategy at Bank of America Merrill Lynch. He joins us now on the phone from Washington, D.C. Dan, thanks so much for joining us. To what extent did the meetings this weekend underwhelm your expectations of what could be accomplished?
Good morning. Thanks for having me. A couple of things. First of all, the big story was that they indeed are adding a new job to the IMF, which is surveillance over currency markets. The only problem is that it's unclear how exactly they would surveil. But on the other hand, I think there is a lot of wait and see until we get to Seoul next month with the G20 meetings.
All right, so we have a month till the next agenda point. What is the effect on the markets going to be over the next 30 days?
Well, I think that the markets will actually be quite boring unless there is a very, very surprising step either on the politics in the U.S. or with respect to the currency report, because they could actually release a second currency report.
All right. Now, if they redo that, what does this mean for this idea of a currency war? We know that the U.S. is almost accusing China of leading other emerging markets, countries, or even Japan, for example, to devalue its own currency.
Yes, that's correct. But again, the main story really is China, and China is gradually appreciating, and China will likely continue to gradually appreciate. They're tightening monetary policy, and they actually increased the reserve requirements over the weekend, overnight. So I think China will continue to gradually appreciate, and it really is against them. I don't think that there will eventually be a currency war, at least not in the coming weeks.
What about the idea that some Asian countries could get together along with China? I'm thinking of Indonesia, Malaysia, Vietnam. I mean, other places that have become a hotbed of growth and have become of interest for U.S. investors.
Yeah, I think this is actually a very important point. I don't think that they will necessarily get together, but I do believe that it's not only about China allowing their currency to appreciate, but also other Asian currencies to allowing their currencies to appreciate as well. And I think that will happen in unison together going forward.
Dan, thank you very much. Daniel Tenengauzer joining us there. He is an emerging market strategist from Bank of America Merrill Lynch.